Hey guys, thanks for tuning in for another edition of my trade reviews here on February 21st. Alright, so I had a lot of trades today. I've been taking more trades. In the past couple weeks, I've been really trying to be very selective in my trading, take a small number of trades. But today, well, after the past few weeks, I've been pretty much break even, and I've been able to more or less stick to my stop loss levels. And although I haven't had any big winners yet, I'm confident in my risk management strategy and confident in my ability to not overtrade. With that being said, I do want to get more repetitions of trading. I want more. I want to be exposed to more reps on setting stop loss quickly and being able to react to the market and the dynamics of being in a trade. So that being said, since I want to improve on that, I'm taking more trades um, in order to achieve that. So I did take a lot of trades today. I don't know if I'll be able to cover all of them, but we'll do as much as I can. Now, so to start off, here's the S&P 500. Like I said, we're getting close to the 280s level, which should act as a strong resistance. Um, and if we zoom in here on the SPY, we can see that we've had a strong trading the past 3 days. Where we tested this 279 area, and that being said, upon review of the market, I decided that I would look for the market to either push higher up to 280 and then up to the 280s area up here. Sorry guys, let me just edit this. I keep forgetting to save these so that you guys can see them better. So this white line here up at the 280s, we were looking for the market to come test this area, and then I was expecting a strong sell-off after that. And the other scenario was have the market pull back to this dotted white line down here, and then get balled up and continue to run, or even come all the way down to this green line before we could consider it truly a downtrend. Because if we look back since January, since the beginning of January, right here, we can see the beginning of 2019, every pullback has been balled up immediately. Pullback, balled up, pullback, balled up, pullback, balled up, pullback, balled up, pullback, balled up. And then we can also see that oftentimes these pullbacks they pull back into these white lines which correlate with previous highs. So a lot when I have a white line, it means it's a mark of a previous high. So this white line, I was expecting a healthy pullback to this area. Um, so if the market dropped, I wouldn't panic and I wouldn't think that it's automatically a short until we break through these areas. So let's get right into the trades now that we have our overall market direction in mind. So the first trade that I was watching Nike. Nike, if you guys know, you watched basketball last night during the basketball tournament. One of the top players, his shoe broke. He was wearing Nikes and he injured his knee because his shoe blew up. So Nike was gapping down this morning in trading. If we look at the 4-hour chart, so we can see Nike was gapping down, and my plan was I have these levels marked off for possibly bounce areas. As we can see, it bounced off the 83 level. And my plan was and this was pre-market, so my plan was to wait for it to retrace up higher around this area and short it down further to look for a continuation down to 83 or 82. As we can see, it did pull up here, but there was not much continuation back down to 83. So let's go into the 1 minute time frame and look at my trades. So the first trade that I took, um, I went short 100 shares right here at $84.03, and my stop loss was above the previous high right here of 84.15. So I called it basically 84.20 would be my stop, and I was selling at 84.03, which makes that's a 17-cent stop loss. So on 100 shares, I would be risking $17. So as we can see, the price pulled down in my favor down to 83.90, but that was only 13-cent gain, and my stop loss was 15 to 20 cents. So I didn't have it was still not barely not even a one-to-one risk reward at that point. So I didn't want to cover my shares. That's why I held through. We had this pullback, and I saw this action curling up here, and I actually tried to um, buy my shares back here at $84 to cover 3 cents above my um, break even price, so I would get out at break even or small profit. But on accident, I hit sell again, which means I added to my short position instead of covering up. So I added in, and as soon as I realized that, I bought back 200 shares to completely exit my position at 83.99. So a 4 cent um, or a 4 cent gain on that trade, roughly. Now, so then I saw this, we got this, and then so it was curling up here, and then at 9:43 it had this massive drop, and I saw this huge drop, and then and after I saw that, I figured that it was looking bearish and it was getting heavy selling pressure, and there's pretty high volume here on this volume bar on this red sell candle. So when I saw that, I waited for a pullback retracement, and I shorted up here at 83.95, and with 300 shares. So my stop loss, I believe it was just a break above 84. So it was, roughly, if I stopped out 5 cents above 84, I would have been risking $30 on this trade, and that's exactly what happened. I went short here. We didn't get in the market reverse on me and squeezed out, and I stuck to my stop loss. I stopped out for a $30 loss on that trade. Um, the thing about Nike is, even though it wasn't play today, it had a lot of volume. It doesn't move that much because there's so many shares floated out there. It takes a lot to move the stock. So as we can see, this big drop here was from 84 to 83.50. That's only a 50-cent drop. So on 100 shares, I would only be making $50 on that. So you need to go bigger share size on Nike, and it's not the best stock for me to have been playing. So keep that in mind. So that ended up with put me down $30 to start the day. Now let's go to my next trade, which was on CRON. CRON was moving up very strong on the day. We can see this was the highs, and it came down. It had a hard drop, but it was got bought up big, and these shorts got squeezed out. More shorts came in and shorted it back down, but it won't break. It doesn't want to break and hold below $19. So it's been grinding up from $19 since, trying to retest around these previous highs of the low to mid 20s. Now, so I was cautiously long on this just because of the price action. We can see how hard it's pushing up, so I want to be long, but keeping in mind that we do have that previous resistance, and I'm not, and based on the other stocks that are in this sector, they weren't having a good day, so I was skeptical about taking this trade long, but I took it for a scalp trade attempt long. As you can see, I took 500 shares right here at the bottom at 22.75. And my stop loss would have been down here below these candles at about 22.65, so a 10-cent stop loss on 500 shares. So I'm risking $50. That's right at the top of how much I want to risk on any given trade in a day. So as we can see, I took the trade down here at 75, and we got to push up to 22.81, not quite up to this previous high level, which was my profit target, but I sold early here. So I bought here at 22.75, and I sold up here because at this time the market was also curling back over to test the lows, and I wasn't comfortable holding this stock. So I stopped out, or I sold most of my position here, 300 shares at 22.81 for only a 6-cent gain, which is not what I want because that's not a good risk reward. But at the same time, I felt like the stock wasn't going to push up much higher, so I took 300 off there, and then once we got this drop, I took 200 back off on the backside for only a 2-cent gain. So I came out up very small on that trade for a $22 win. So that put me just pretty much break even for the day at that point. All right, then the next trade that I took after that was on CVS. I was watching this pre-market because it was gapping down. If we look here at the 1-hour chart, we can see it was gapping down huge pre-market. Sorry, yeah, so it was gapping down, continuation from yesterday's earnings, and that's what I was looking for. And I had these. We can see it was all the way down here at the lows. We put a line here at at those lows of $63, and historically, every time it's hit this, we zoom in, we can see it's tended to bounce up off this line. So when I saw it all the way down here, I saw it sitting in a higher low, which means it was uptrending slightly on the 1-minute chart. If we look in here, so this is today. So it came down, tested this white line at around 63, and it was under, and so we got this. We hit a low here at. Let me remove this drawing. So we hit the low right here at 62.50, then we hit it again here at 10:14 a.m. 62.50, and then we came up and we started basing right here at this 62.65 level, and this is a higher low, meaning this low right here is higher than this low area right here. This is a uptrending pattern. So I went long here 100 shares, and I was planning, and I only went 100 shares, and I had a big stop loss. That's why I went 100 shares, because I wanted to have a nice wide stop loss all the way down here to below 62.50. I bought at 62.70, so that's a roughly 20-cent stop loss. So I've risked $20 on there with 100 shares. Now, as we can see, it pushed all the way up here to the 62.90s, and that would have been a 20-cent profit, but I was risking 20 cents, so it was a 1-to-1 risk reward, so I wanted to get a little more out of that. In hindsight, it's at the VWAP. This was a perfect sell point, and that's exactly what people did. It sold back off. So a better trade would have been to have the tighter stop loss with a bigger share size, and I would have sold up here and gotten out for a profit. Instead, I waited through the pullback. We pulled back down here to 62.74, and I liked the action I saw, and I think I saw something in the market right now that led me to believe it would push higher, and I was to continue to put in this base. So I added 100 shares here, hoping we get another push up to 62.90, and I could take half my shares off there. Fortunately, guys, that never happened. The stock ended up dropping, and I stopped out here for a small loss of $24. Now, I had 3 more trades on. I had 1 trade on Facebook and another trade on a penny stock, and I was up a small amount on Facebook, but I lost $50 on the penny stock. So I'm about down $50, maybe break even on the day. About breaking even on the day. And so, guys, I'm running out of time, but I just want to clear this up. So I'm noticing that perhaps I'm trying to find the right strategy for how I'm doing. I'm noticing that scalping's not working with my small stop loss limit, so I may try to start converting to more intraday swing trading strategy.